Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Friday, the 15th of November in London. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, Jerome Powell says the strong US economy means the Federal Reserve can take its time on interest rate cuts.
Rachel Reeves says the UK's post-financial crisis crackdown on banks has gone too far and plans on reversing course.
Plus, bankers are dancing in the streets. Jamie Dimon tells Bloomberg the industry is looking forward to the prospect of fewer regulations under Donald Trump.
Let's start with a roundup of our top stories.
The Federal Reserve Chair Jerome Powell says the remarkably good performance of the US economy means the central bank doesn't need to rush to cut interest rates.
The economy is not sending any signals that we need to be in a hurry to lower rates. The strength we're currently seeing in the economy gives us the ability to approach our decisions carefully.
After Powell's remarks, Treasury two-year yield spiked as the dollar rose and the S&P 500 fell by 0.6%. After his comments last week on the status of his own job under the incoming Trump administration, Powell also chose to address Fed independence.
I've spent a lot of time on Capitol Hill, and I think where it really matters on both sides of Capitol Hill, the Senate and the House, in both political parties, there's a broad understanding that an independent central bank is very important in just serving the public as best we can. We're not perfect. Everyone makes mistakes, but you'll get the best results if you have people who are just focused on that task and separate from politics.
Powell made no direct comment on the possibility of a cut at the Fed's December meeting, but his wider view on US economic resilience led traders to pair bets on a reduction to less than 60%.
Andrew Bailey says that Britain's growth potential has fallen significantly and needs reform. In his annual speech to the City of London, the Bank of England governor says that the country needs to look at how it invests.
Potential supply and growth matter a lot. We don't have a good recent inheritance, so it is a big issue and it needs our attention. Investment in capital formation and how to increase it matter.
Andrew Bailey added that he supports free trade and would welcome opportunities to rebuild ties with the EU. The event at Mansion House saw the heads of Britain's monetary and fiscal policy talk about trying to revive the country's growth hopes. Bloomberg analysis shows a change to the central bank's bond portfolio in recent weeks has also freed up £10 billion for the Treasury to spend.
Speaking alongside the Bank of England governor, Chancellor Rachel Reeves said the crackdown on banks after the 2008 financial crisis went too far. She says the UK now needs to regulate for growth, not for risk.
It is important that we learn the lessons of the past. These changes have resulted in a system which sought to eliminate risk-taking. That has gone too far. And in places, it has had unintended consequences that we must now address.
In her first Mansion House speech, Reeves called financial services the crown jewel of the British economy. The Chancellor also announced plans to merge small pension funds into mega funds worth £800 billion.
And the UK Chancellor isn't the only one warning that regulation is hurting growth. The CEO of JPMorgan, Dimon, has also weighed in on the issue, saying that many in the industry are likely to appreciate a shift in the US in the approach from President-elect Trump's incoming administration.
You know, the banking industry, whether you voted for Trump or Joe Biden, you know, a lot of bankers, they're like dancing in the street because, you know, they've had successive years and years of regulations, a lot of which stymied credit, you know, and so and you could have kept the banks equally safe, but had them do more credit. And so, like, to just give you an example, the average bank in America, I think the number is, used to have $100 of deposits and $100 of loans, and now it's $100 of deposits and $65 of loans.
The JPMorgan CEO also shared his thoughts on Trump's threat to impose widespread tariffs on imports.
If you read all the stuff that he said as advisors, you know, he also says it's going to get them to the table. You know, you have a free trade agreement with us. My guess is that's fine. And I believe, I can't put words in his mouth, but he says free and fair trade, he means equal. That's what he means. So if your tariffs are 20% and our tariffs are 5%, he's going to put 20 on you.
Minutes before Dimon took to the stage at the APEC CEO summit, Trump released a statement ruling out a nomination for the JPMorgan CEO. Responding at the event, Dimon said, quote, "I haven't had a boss in 25 years and I'm not about ready to start."
Well, President-elect Trump, meanwhile, has continued to make high-profile picks for his new administration. The incoming US leader has nominated pharmaceutical industry critic Robert F. Kennedy Jr. to lead the Department of Health and Human Services. Wendy Benjaminson is our deputy managing editor for US government news in Washington. She says if he's confirmed, he'd play a major role in American lives.
He has tremendous power over all Americans' day-to-day lives. I mean, there was talk that he might get an advisory role, something like Elon Musk and Vivek Ramaswamy got, some sort of off-the-book, project to work on. Instead, he put him right at the heart of Americans' health and diet.
Wendy Benjaminson says RFK Jr.'s views are likely to face scrutiny during his Senate confirmation hearing. Kennedy has been a vocal vaccine skeptic and during the COVID-19 pandemic called the shots against a crime against humanity and compared them to the Nazi Holocaust. Shares in vaccine makers fell on news of the announcement, with Moderna, Pfizer and Novavax all down.
And lastly, some data. Retail sales in China grew by 4.8% in October, the strongest pace in 8 months. The data is a positive sign for the government in Beijing, which has announced bold stimulus measures to boost the economy. China's benchmark CSI 300 index paired losses of as much as 0.9% after the data release.
Those are your top stories. On markets, we saw the S&P 500 on Wall Street fall by 0.6% at the end of the day yesterday. 2-year Treasury yields rose by 7 basis points. They're rising another basis point in trading today to 2.36%. We did see falls in the shares of electric vehicle makers, the likes of Tesla down 6% and Rivian slumping 14% after Reuters reported that Trump plans to eliminate the consumer tax credit for EV purchases. In Asian trading, we have seen the dollar take a breather from its 5-day rally, and US equity futures are in the red. Stocks in Asia showing some strength. The Hang Seng is up by 0.6%.
Now, in a moment, we will bring you more on what Jerome Powell said about the path ahead for the Fed. Plus, we will dig into the Chancellor's message for the UK financial industry at last night's Mansion House speech. But first, something that caught our eye this morning. This is about the satirical news website, The Onion. Don't know if you ever read it. It has won a bid to buy the InfoWars site, which was founded by the right-wing conspiracy theorist Alex Jones. This was quite a big story in and of itself, but now the deal apparently isn't quite done yet.
No, I mean, this is almost an Onion story in its own right, in fact, because obviously the news of a satirical news website buying InfoWars with money, of course, InfoWars, part of the Alex Jones empire, Alex Jones himself facing defamation payments over statements that he made calling the 2012 Sandy Hook school shootings a hoax. This bid was actually supported by money from families of the victims of that shooting. So there's a whole story there happening as well. But actually the whole process of awarding this company is also now facing scrutiny. The judge, the bankruptcy judge involved, has gotten involved, saying that he wants to put the deal on hold. He's called a hearing next week to review the transparency of the process involved. Now, lawyers for The Onion believe the deal is secure, but it still isn't done yet. So a lot of the headlines saying that it has happened are now themselves turning into their own form of irony.
Yeah, absolutely. And the issue, the bankruptcy judge says he doesn't care which person or which entity actually buys this site. He says he's focused on the process. I mean, look, the background to this story is kind of sad, isn't it, on this side of the Atlantic, looking at that, the kind of impact of InfoWars on the Sandy Hook families has been really so destructive and kind of abysmal.
Yeah, and part of their ambition in buying it was to turn it into also a platform where, advocacy for gun control could feature very prominently. So to push back, I suppose, on some of the messages that were being pushed on websites like InfoWars as well, but the legal battle ongoing over the ownership of that brand.
Now, let's talk about Jerome Powell. He says the Federal Reserve doesn't need to be in a hurry to lower interest rates. These were remarks that led to traders paring back bets on future Fed moves. moves. This is the dollar and Treasury yields have surged since the election of Donald Trump. Our markets reporter Valerie Teitel joins us now for more. Listening to Jerome Powell last night, does that mean a pause from the Fed is likely, possible? How do you rank it for mid-December?
He solidly opened the door to a pause in December with his words saying they're in no hurry to cut interest rates. And then he went on to say that going slower, if the data allows us to go slower, is the right thing to do. We still have some more data prints before this December decision. Is very much open for a December pause if the data warrants it. It's been quite a head fake when it comes to what's been priced in for this December meeting. Before CPI, it was looking unlikely. Then CPI came in soft. It was looking a bit more likely we get that cut. And now we've totally reversed that again. We're now looking at a 50-50 chance that we do get that December cut. So a bit of head fake going on there in the front end of the Treasury market. We're now pricing in a big probability we do see a Fed on pause in December. And, it's notable to see the equity markets really not liking this more hawkish tone. Caroline, we have S&P futures in the red. Eurostoxx 50 futures are also in the red after these more hawkish comments from Powell late last night.
What else stood out from you from what we heard from Jerome Powell? Of course, we've been very keenly listening out to see what he might say about Trump's policies and what effect that could have on inflation.
One thing I thought was very notable is when he was asked about tax policy and fiscal spending, his comment was that the approval for these could take a year. It has to get through Congress, it has to get approved. And then the effects on growth, it could be until 2026. He even noted 2027 until we see a growth impulse from the more fiscal spending, the fiscal loosening that's promised under the new Trump administration. He did talk about tariffs, saying the effects of them are not obvious. And he spoke specifically on the not obvious fact of retaliation. We don't know how far a trade war could go or could escalate, but he talked about it in the scope of the downsides hit to growth. He was not talking about it in a framework of it igniting inflation. He was more concerned about tariffs having a more lasting impact to the downside on U.S. growth. And he said we really have to wait and be patient to see how the net effects of these all spin out. He did also talk about immigration policy when he was asked if he's worried about the deportation of migrants possibly causing the labor market to tighten and growth to weaken. He didn't answer that directly, but he did say that in the last 2 years, we've seen a big push of immigration into the U.S., and that has supported economic growth by adding more people to the labor market. So he kind of implied that the reverse of that could negatively affect growth.
Let's turn to some of the headlines that we had out of the Chancellor Rachel Reeves's speech to Mansion House, or at Mansion House rather, last night, talking about UK's regulation of banks since the financial crisis going too far and hindering growth. Our UK politics reporter James Wilcock is with us for more on this. James, the Chancellor talked about regulation having gone too far. Is she suggesting that post-crisis rules should be scrapped?
Quite a few of them, yes, to be honest. I mean, obviously, it's not a speech in Parliament, so this isn't law, and a lot of these regulations are tied up in reviews. But just to go through, senior managers and certification regime, this is something that came in post-2008 to say senior managers at banks would be held personally responsible for things that went wrong. She said that's gone too far. Bankers' bonuses being deferred further away so they could be clawed back in the event of things going wrong. That is in the firing line. In addition to that, financial ombudsman and how things get brought through redress. That's also under review. So pretty key. I would almost call them retail finance policies, Stephen, in that these are the kind of things bankers on trading floors and in CEO suites are very aware of. This is speaking to the individual banker on the trading floor. On top of that, though, at the day of the speech, on the night, she sent 5 letters to the big 5 financial regulators telling them your remit is to make sure the economy grows, not just to eradicate all risk in the economy. So no, it's not a complete bonfire of regulation from 2008, but it is, she's trying to draw a key inflection point into where she takes the economy further.
Yes, it's fascinating, isn't it? It does sound like the comments were absolutely tailored to win over the financial sector. But then Rachel Reeves also wants something from the industry.
And it's acknowledged. It was in your interview yesterday with the Lord Mayor of the City of London where he said the Chancellor knows what she wants from here. She desires growth, and we're the place to give it. And the Chancellor said as much last night. The comments you played out, crown jewel of the economy. And she's saying that we need to be more pro-risk. And like you say, comments that any trader in London wants to hear. She also said that public service reform has to happen and that public sector will have to change, quote, within the spending envelope. So she's saying they'll have to stick to their budgets and they'll have to make productivity reform.
Yeah, I think this is quite extraordinary, isn't it? Because gone are the days of talk of levelling up and things outside of London. It would seem with this certainly pointing towards the city, the southeast, maybe financial services being at the heart of economic growth, I think, is quite a new message now.
And if you're asking me why that's happening, you can also look to the speech where she says we cannot rest on our laurels. And that was a theme through both her and the Governor, Andrew Bailey, which is Britain is not doing very well, and both of them are quite clear-eyed about the need to make it better. You can kind of sum up the speech from Rachel Reeves as beggars can't be choosers, and we need to make this work, is her view, and she will take the risk and she will deregulate to make that happen. The trade-off is the city will need to deliver on the growth. The one thing I would add in that's worth pointing out is there's a bit of, I'd call it almost Boris Johnson cakeism geopolitically, in that from the view of both Bailey and Reeves, the heads of the monetary and fiscal policy in Britain, we need to do deals with everyone. We need to be working with the EU, we need to be working with the US. Open free trade benefits Britain. And there was a sort of line there of Reeves will do anything to safeguard the economic prosperity of this country, no matter who it is with.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.